Utilizing candlestick signals and patterns allows the candlestick investor to be in the appropriate direction of a market as well as a price trend of individual stocks. As we saw a couple weeks ago, we had a big morning star signal that formed in the Dow that eventually created this evening star signal, a 3-day pattern, and on top of that, it closed below our T line. The T line, a very strong indicator of what your overall trend is going to be. So this also told us that on Friday, when we saw a hammer signal, potential reversal signal in the Dow, our very simple rule is if we see a candlestick reversal signal and a close above the T line, a reversal has occurred. So what finally happened on Friday was that the Dow was trading up most of the day, but they couldn't close it above the T line, which gave us one very simple parameter, that we were still in a downtrend until we could see a candlestick buy signal to close above the T line. And the weakness of Friday, even though the market was up strong, was more compelling in the NASDAQ that opened higher but immediately started trading off and eventually did a bearish engulfing signal or a left-right combo, which is a very strong sell signal, that they failed at the T line. The left-right combo is a doji followed by a bearish engulfing signal, pretty much telling us they still hadn't changed the downtrend, and that led to our expectation of further downtrend until a very simple parameter, that you see a candlestick buy signal and a close back up above the T line. Knowing the direction of the market and knowing what major signals, buy or sell signals, occur at support and resistance levels allowed us to be short positions like blue with a strong downtrend to it. And even on Friday, when it opened slightly positive, we could see that it was selling off immediately. So we could stay short because it wasn't coming up above the T line. However, now we're in the oversold area, and look how far away we are from the T line. That just gives us a little bit more alert to get ready to take some profits if we see some excessive selling on tomorrow. And until we see a definite reversal in the overall market, we can still be shorting positions that are showing bearish patterns, like a dumpling top that we recommended you shorting ESPR this morning on weaker trading. Because this pattern right here tells us there's more of a slingshot effect heading to the downside. Essentially, being able to visually see what's going on in investor sentiment and knowing where they're trading, or a stock price or a trend is trading as compared to the T line, allows the candlestick investor to be in the appropriate positions with a high degree of probability. That'll be it. We'll see you in the chat rooms.